管他呢，当然给他吃呢。你拍给他的退钱。
Alright, hello and welcome to Camel Finance. I'm your boy Camel, and this is your weekend's deep dive, TA, and all of that good stuff. Look, I hate to beat the same drum over and over again, but nothing has really changed, right? Nothing has really changed. It's right until it's wrong in trading. This is the base case, primary hypothesis, and as it stands, it's starting to look more and more validated by the day. Okay, that is a very, very nice close. Now, of course, there's always one, isn't there? This yellow line is not designed to predict a price. This is not me saying that this is the number we'll top out at, nor is it designed to pick the date that we top. This is just an arbitrary yellow line to show the rough trajectory of the expected path for the stock market. So far, so good. We continue to move higher. And all of this was indeed predicated on the idea that we are swinging from a highly inflationary environment towards deflation. I believe we're no longer here and we're much more like here. The reason I thought this was the case was because this is the M2 rate of change, and whatever happens to the blue line tends to show up in the CPI print down the bottom in the green line. However, the thing that we see in blue, the M2 rate of change, actually lags by 18 to 19 months on average in the CPI. So whilst we had a down, sideways, and down in the M2 rate of change, this whole thing lags by 19 months, and thus we've seen down, sideways, and we are yet to see the final leg down. I believe that as this starts to be manifest into the CPI print, we will indeed swing all the way into deflation, just like we saw China do in December, and thus we should get this big blow off top moment where everyone thinks inflation is finally tamed, the Fed is finally ready to be more accommodative to markets, and then of course we have this deflationary bust and a rollover and a big recession. Now again, it's a work in progress, okay? It's been right since the bottom and it could fail at any day. I'm not suggesting that this is a prediction, I'm not suggesting you should believe me, I'm not suggesting I'm going to be right. As ever, one day at a time. The only thing I know is that I do not know anything. But with that said, when we take a look at the current inflation print, whoa, 1.89%, the lowest print according to Trueflation I have seen in a very long time. Okay, does this or does this not look like down, sideways before the next leg to the downside? We continue to apparently validate this. We almost certainly, if this continues, are going to have a 2 handle, a 2 at the front of the next CPI print. And you better believe that that is going to further validate this idea as we go into berserk mode for the stock market. So wasn't expecting to see this as quickly as that. But wow, okay, wow. So have a plan and stick to it. It is right until it's wrong. Now I'm open to being proven wrong, as I say all the time, but so far, so good. So as we continue to swing towards what I believe will be negative 2, 3, even 4% as we move into deflation, we should start to see the interest rates reprice accordingly. Now, as it stands, January, we can tick this off and say, yeah, with almost certainty now, we are going to see a pause at January's meeting in a couple of weeks' time. No surprises there, really. With all the Fed speakers that have been talking over the past week or two, we have now seen a significant repricing where the expectation of remaining paused instead of cuts as early as March has now soared to almost 53%. So you can see a week ago, we were at just 18.9% probability that we were going to see a pause, and thus we were at around 80% probability that we were going to see cuts as early as March. Walking forward 1 week, we have now shifted to a 53% nearly probability that we're going to remain paused as opposed to an 18% probability. So the Fed speakers have apparently done their job at convincing the market that they're not going to cut as early as March and that they want to see inflation come down. Now, of course, there is major scope to see this reprice dramatically as early as mid-February. Right? And the reason I say that is mid-February, we're going to get that CPI print. And based on everything I've shown you so far, it's going to have a 2 at the front of it, isn't it? It's going to be on a 2 handle, 2.x. Now, when we get a 2.x and everyone else has figured this out, because right now, I believe this is alpha. I believe most people don't think this is coming. In fact, what I believe most people think is coming is that we're going to perhaps see a 2.9 print and then inflation's going to start to trend up again. That's what I believe is consensus in the market. But once we at least see that 2.x show up at the next meeting in the middle of February, I am almost sure, I'm very, very sure, as sure as you can be in markets, that we're going to see this continue to price more to the downside, meaning we're going to start to expect cuts to show up sooner rather than later. But there's one caveat to this, and that is that it doesn't really matter. It doesn't really matter if we cut rates in March or if we wait until May's meeting. Clicking out to May, even with the current inflation expectations, even with the current CPI prints and all of that jazz and the Fed speak that we saw this week, there's only a 15% probability right now that we are still paused in May. So that means that especially after we get these lower CPI prints, we are going to see rate cuts somewhere between March and May. That seems almost guaranteed. And of course, historical data that I've shown time and time again shows that from the moment we get cuts, we can maybe expect a maximum of 1 to 2 months of continued upside for the stock market before the whole thing typically comes crumbling down. Thus, we should expect to see a rally into as late as perhaps May if they cut in March, or as late as July if they cut in May, and then this whole thing should come tumbling down, in line with us, of course, making that third leg down towards deflation, and in line, of course, with the M2 rate of change finally showing up, this third leg down in the CPI print. So far so good, right? Long and strong, continue to push, and this melt up chart seems to be starting to become a real possibility that we are indeed going to finally get this blow off top moment. So overall, happy days. Just as the S&P 500 makes new all-time highs, asset managers this week dropped a huge chunk of long exposure. So I don't know exactly why they would do this, but good, because the more they drop the exposure, the more there is a wall of worry for the market to climb, the more there is opportunity for these asset managers to realize they've made a mistake and need to go chasing and following the trend higher. And the biggest question on my mind is, since the stock market is moving into a clear risk on moment and Bitcoin is nowhere near its all-time highs, I think we're still about 60% off of its all-time highs, is there a massive catch-up trade coming for Bitcoin and the crypto-related equities? I believe there is. I do think first we've got to find that cycle low around the 9th of February. We'll get to the charts in just a minute. For now, speaking of Bitcoin, look, the SEC has started to move forward with the idea that they're going to allow options trading on BlackRock's spot Bitcoin ETF. This is absolutely massive. One, because it's going to allow people to generate cash flow on their spot Bitcoin ETF holdings. And two, because it's going to allow the likes of MicroStrategy, as well as pension funds and any new money coming into this spot Bitcoin ETF market, to hedge some of the volatility using the options. Specifically, as it pertains to MicroStrategy, they should be able to hedge some of the volatility out of their balance sheet using these options on the ETF. So this is massive. One, because like I said, it generates cash flow. Two, because it gives holders the ability to hedge some of the risk out of their position and to hedge some of the volatility out of their position. This is a huge step in Bitcoin becoming the number one apex predator asset. The Bitcoin charts continue to look great, right? Here's 2016, first line, second line, breakout, retest, go. 2020, right? First line, second line, breakout, retest, go. And here we are today. First line, second line. This is a GAN fan, I believe. Breakout, retest, looking for that resumption. Hasn't done it yet. We are still vulnerable to a downside move. But so long as we don't make that downside move, then this remains my primary base case. And especially given the stock market is breaking out to new all-time highs, it's pretty wild. It's pretty wild. All year I've been hearing people say that was a ridiculous call to make and I was silly for making it. And now here we are breaking out to new all-time highs. I think Bitcoin is soon going to follow suit. I've been saying this over and over again, and to be fair, I have not yet been right. I thought Bitcoin would be at all-time highs by now with the stock market. It's not, but in my mind, that just means there is huge scope for outperformance here over the coming months. Even with this recent sell-off, I've been talking about this thing being sideways for a long time. People have been quick to say this is Wyckoff distribution and this is the spring and this is the sign of weakness. Look, maybe, okay? I've also heard people say, yeah, well, there's a head and shoulders here. Let me clean this up so we can be really clear. There's a head and shoulders here forming, and maybe there is, okay? Maybe there is. But the reality is, for both of these Wyckoff distributions and for the head and shoulders pattern, assuming they're even a thing, which I don't really believe they are at this point, okay? I think a Wyckoff distribution has to be a lot bigger than this. That's just my opinion. But even if we just say, fine, this is Wyckoff distribution or this is a valid head and shoulders pattern, which again, I do not believe it is. But if we assume that it is, the point to actually even start to worry or pay attention is the loss of support at the bottom, okay? If you have a head and shoulders pattern, let me draw a neckline, right? If we have a head and shoulders pattern like this, then it doesn't break down and instead it resumes up like this, which I see in the S&P 500 more than I see head and shoulder tops form, then is that really a head and shoulders? No, it's not a head and shoulders until it breaks down. That's where you attack on the neckline break. And the same is true if this was Wyckoff distribution, it doesn't become tradable until we break down at the neckline. So all the while we're holding this, then the thing is bullish bias. I've said this before at multiple price levels. There was a time when there was this big debate about whether Bitcoin was bullish or bearish, and we were just holding above this 25K level. And I said, look, it's malpractice to be bearish. all the while we're holding 25k. And of course, what happened is we resumed higher. And it's the same deal right now. It is malpractice to be bearish until we at least break down and take out this cycle low from back here. So all the while we're above that, it is impossible for me to be bearish. The moment we close below it, then I become bearish in the short term, right? Targeting a cycle low due around the 9th of February. We'll get to the charts and show you that in a minute. But all the while we're above, the thing is bullish, and that's as simple as that. If you don't believe me, here it is from Tony the Bull. Look, as long as we're above the blue box highlighting a rising window in Bitcoin CME charts isn't filled, the uptrend should be fine. If the gap is filled or the price cuts through it, concern will grow. Again, all the while we're above that low, right? The thing is bullish and we expect higher prices. Fill that gap or close below it, then we can start to entertain bearishness. And just remember, okay, if this green thing plays out, if I am right, if this is what comes next, just like back here, then don't you dare call anyone that goes long at the moment lucky. It takes real courage and clarity of mind to focus on your plan where there is so much noise and panic all around you, where every time I make a video, there are dozens of people commenting to say absolutely no way I can be correct. I'm not saying I will be correct. I'm just saying have a base case and stick to it. This is my base case, and I do believe this is what's been coming next. If you're familiar with my content, I've been very consistent in saying I believe this is what comes next the entire time. So if we turn out to be right here, you know, I'm not going to say I told you so, but in exchange for that, I don't want you to call me lucky either. And so the last couple of things I want to point out, even though the S&P 500 is making a new all-time high, right? We are nearing a 35% upswing off the bear market low from October of 2022. Historically, forward returns say that the 6-month interval are noteworthy. We were up 15 times out of 15. Again, it tells us to keep an open mind about better than expected performance over the next 6 months. Tells us that perhaps we see those cuts come out in May and we can continue to see a rally for the next 6 or 7 months ahead of us. Lastly, before we get into the charts, here is your weekly LOL update. Okay, the BTFP, look at that. Absolutely ridiculous. So QE in disguise, again, something that we've been hearing all year is where's the liquidity going to come from? And the answer is multiple places, just disguised as something else. So with all that said, the DXY, look, this at the moment is confirming a 3-year cycle low, but I am still open to moving the goalpost back to the original target. I'm still open to seeing this Dixie roll over, but get above this level right here, this horizontal in red at around 104.5. Get above there, and I think this thing's pretty much confirmed. So we'll see. Of course, we could always get a deviation that then sharply reverses. Anything and everything is on the table, but I'm kind of keeping my eye on this trend line here. I want to see that breakdown. I want to see us roll over. And most importantly, I want to see us undercut that low, which would tell us that this is indeed not the 3-year cycle low and we're looking for one lower down as originally intended. But when the market speaks, when the market breaks out like this, and when it's in the timing window to have a 3-year cycle low, it's no good ignoring it, right? So as it stands right now, this is all we can say. We can say that it's working on a 3-year cycle low. It's susceptible to fail, but it is indeed working on a 3-year cycle low. Get above here. And again, we have to say it's confirmed. Hopefully we can see it roll over. That would fit the narrative of everything else. And if it does, then we can entertain moving the goalpost one final time out here. Yields, rejection at resistance, right? First line of repair made, but not yet made the second. So if we can get some kind of rejection at resistance and a rollover out of here, then expect risk to come on. The stock market doesn't get more bullish than that, does it? Confirming now that this is indeed the correct count tells us to be open to seeing another full 40-ish days of cycle ahead of us. I think we can adjust this trend line one final time and say that that is indeed the level the market is respecting. So we don't need this anymore. This is just in the way. The green line is the all-time high break and it's plain sailing ahead in theory, right? It's open skies. There's no overhead resistance. We are now in price discovery. So we should be getting super duper uber bullish here. The stop from the first position can be moved up underneath the stop from the second position now because we've given it plenty of space. And long and strong continue to push. It's the same deal with the NASDAQ, right? We're still pushing this original long, still breaking out from the all-time highs. So, I mean, that thing is as bullish gets, right? We've got our trend line, our line in the sand, break down from this red one, and we don't want to be near longs. But for now, happy days. Dow Jones, we choked the stop up, haven't we? So do I want to use this as the new line? I think this probably should be the new line in the sand, something like this. And ultimately, it's a long and strong continue to push, targeting this measured move at 38.2. But I do think there's scope for overperformance here. So we'll keep pushing this. We'll choke the stop up as we can, and we'll use this line in the sand in red as our exit. But there's not much more to say, right? Apart from long and strong continue to push. Russell 2K, thinking about breaking out. I wonder if we're going to get a repeat of this red squiggle, something like this. I wonder if this is what's coming. Let's get rid of that. It's a bit messy. But I do still expect this thing to break out here and start to move higher. So there's an entry potential there as a trade idea to get long on a breakout here if you're not long already. Wasn't expecting this VIX spike. I was only expecting 2 drives. We got 3. So maybe I can move the goalposts, and forgive me for doing so, please. Oil, a lot of people seem to think that oil is going to break out and move higher. Look, it might. But if you take a look at this inflation data, right, objectively speaking, how do you see oil moving up if we're moving into deflation? That's what I want to ask you. I want to ask you that. I personally don't see it. So I know there's a lot of news, and I know there's always a narrative. They're always at war somewhere over oil, right? Like, that's pretty much how they keep the price where they keep the price. But I do think that if we really are going to move into deflation, and that's what the data shows, then this should continue to move down. So I'm still pushing the short. The stop is choked up. Someone asked me to cover nat gas. Not super interesting, really, is it? We are currently working on a big bottom formation, something like this. But as you can see, there's no real breakout. If we could pop up here, breakout, retest, and go, then happy days, right? You can buy the breakout above the range. But as it stands, we're still working on a bottom, and there's nothing to say, especially given that whole deflation idea of mine, that much lower numbers aren't coming. If much lower numbers are coming during this deflationary bust, then at some point, right, at some point, there'll be a massive opportunity to load up at the bottom for basically free, right? Around 1 or less. That will be a massive trade as we then come rocketing out of here on a QE bomb. But for now, right, this is not that interesting for me personally. Gold's still kind of following my yellow squiggle, isn't it? So continue to grind, look for a short. I think we're going to stick with the plan on that one. And Bitcoin, right? Look, Bitcoin's still holding above that low, isn't it? I really don't have anything else to say, apart from the fact we do seem to be putting in one of these consolidation fractals from back here. Let me just stretch this thing out and fit it here. Look, it kind of seems to me like we're going to do something like this. Maybe this cycle low indicator should be brought down a little bit lower than it is. Maybe we're going to do something like this and then start firing off. So I think the key thing here is a little bit of patience. People are going to get chopped up because they're unaware of these cycles. And if we just have the cycles as context, we know that even if we start to rally out of here, right, even if it starts to look bullish, then there's probably going to be a pullback into that cycle low, just like we saw back here, right? We had this chop, started to rally, pull back into the cycle low, and go, and that's where we added the second position. So I do still remain optimistic. I do still think, particularly given that the stock market looks like this, right, above all-time highs. Since the stock market looks like this, since the S&P 500 looks like this, right? I mean, it's hard for me to be bearish here. It's hard for me to think that Bitcoin doesn't have a catch-up trade in it. Now, it's always possible if we lose this cycle low that the next cycle low forms all the way down at, I don't know, 32K. And all that would really mean is we have this range break in 25K, breakout, retest, retest, and go. It would also mean that we then broke out of the 32K range, right? And came back for a retest before resumption to the upside. So I am open to that. I'm certainly open to that, but I just don't think we get it. And the reason being, I think too many people would love to buy 32K Bitcoin. I think too many people would love to see that retest of the range and go, yeah, that's really healthy, which of course it would be if we did this and then this, you know, that'd be a really nice entry here, right? Stop just below. I think the problem with that is, as healthy and as nice as that would be, too many people would be happy to receive it. And thus, I think max pain still remains to the upside. I think this probably still has to be up here somewhere. And I think we still have to do something like this. So that's the plan. I'm sticking to it until proven wrong, lose that low and all bets are off. And last but not least, I've been getting a lot of stick for this, right? Some people just don't get it. And I understand. I understand if you're unfamiliar with the work. I'm sorry that I have to bang the same drum for everyone else that's heard it a million times before. Look, when I have a normal trade on, right, if we get a breakdown, if we get a failed cycle, then I don't want to give back my profit and I want to take the profit and walk away and lock it in. I want to be disciplined and stick to my strategy. But when it comes to the crypto-related equities, I have a different strategy. So I'm not going to bore you to death with this, but ultimately, the idea for me is to do what I do with Bitcoin and stack more and more positions, right? Now, if you have a problem with me giving back profit, then, you know, that's actually your problem. I don't have a problem with giving back profit here because I did not draw a trend line here and say, I'm going to sell the breakdown. And then when we broke down up here, I didn't just say to myself, oh, actually, I'll just hold it. Oh, maybe it will recover. Maybe it will bounce. Maybe no. The plan all along is to stack as much position and as much size and as much exposure as possible. And that means even if it comes all the way back down here, right, to this red support line and then bounces, I'll add a position from down here. So you might be saying to yourself, well, why give all that profit back? Because now I've got twice as much exposure going into the next leg without taking any additional risk. Okay, so this is my strategy and I'm sticking to it. If you don't like it, that's fine. You don't have to copy it. In fact, I advise anyone that watches my content, do not copy my trades. Okay, don't copy them, because I know how to manage risk. And if you don't and you copy my trades, you're still going to get wrecked. Okay, even though I might be right, that doesn't mean you can copy them if you don't understand how to manage your own risk and how to take responsibility for your own actions and your own trades. So my advice is don't copy me. But again, I know a lot of people get really annoyed about this because, oh, I've given back profit. Yeah, that's the idea. And the reason is, I'll use MicroStrategy as an example. What I believe is coming next is this, some huge parabola, right? Something like this. This is what I think is coming next. And if that's coming next, then do I want to just hop out of the trade here and try to hop back in? No, I want as many positions as possible. I want to ideally do something like this and then grab another one and add that one here like this, moving the stop up each time. And then eventually, after we had our 3 angles of attack, right? 1, 2, and 3, let's be really clear. 1 in yellow, 2 here, and then 3 near vertical. Then when we've had this true parabola, really easily identifiable parabola, I'll close all the positions on the trendline breakup here. But until such time, okay, I don't care that it makes you uncomfortable that I'm giving back profit. If it makes you uncomfortable, just take the profit yourself, okay? Don't copy my trades, but I've made it abundantly clear a million times, okay? I'm happy to give back profit. I'm more than happy to sit through this, going all the way back to break even or even below, to try to add more positions, because I want as much exposure as I can going into this parabola. And to be really frank here, okay? To be really frank, if I'm right and what happens is we do have this huge parabolic blow off top, if Bitcoin has a left translated cycle and I've got a few positions and then I end up selling up here, then I'm going to look like a genius. Okay, and you're going to be slapping yourself in the face going, why did I sell my profit? Why did I take that, 2x gain when there was 10x and Camel had 3x leverage and 4 positions stacked? Okay, so look, you do you. Don't worry about me. Okay, I'm going to keep doing me, and this is what I like to do. And look, I'm either going to win or I'm going to learn. Okay, it's as simple as that. So don't copy me if you don't like it. Stick to your trendline breaks. Take your profit if you need to take profit. But I'm going to continue to do this. So there's no point coming at me in the comments and saying that I should have taken profit earlier. No, I don't want to take profit earlier. And I've said multiple times that I'll do this and take the stop losses as many times as need be. Because even if I get this wrong 3 times and on the 4th time we go into a parabolic blow off top, I will still have made more money than if I hop in and out of the positions. So I'm not going to cover that again. I hope that deals with that. Overall, we are looking to see if we can build some structure into that cycle low, bounce, add a position, and you know the deal. The same is true of Riot. So we're looking to build some structure into that cycle low and add a position, and the same is true of Marathon here as well. So again, I don't care if it comes all the way down to this red support line and bounces, right? I'll add the position from wherever I can add the position from. And again, I just want as much exposure going into what I believe will be the parabola as possible. And with respect, the people that have been doubting me, they doubted this melt up chart the entire way up, okay? This was by far the angriest, most hated, most shorted, most doubted rally I have ever experienced in my 14 odd years of doing this. So it's been an absolutely wild ride. It's been really nice to see this thing come to fruition. I expect this thing's going to continue to play out. And of course, as always, I am open to being proven wrong, and I'm open to adjusting my stance if the market tells me. But so far, so good, long and strong, continue to push. Happy days. I love every single one of you. Until next time, take care from me. All the best. Cheers. Bye.